Hello everyone and welcome to a new weekly market review. My name is Gonzalo Canete and I'm here to share with you a quick view of the most important events happened during the last week. From Monday 8th of July to Friday 12th of July. We're going to pay attention to three different events during this week that bring us the main movements on the prices and the market, especially on gold, especially on dollar. We're going to review also the Nasdaq 100, technological sector, dollar yen, with a massive movement in the yen. Bank of Japan was after all playing the right strategy apparently, and we also gonna review real estate sector in US markets. Let's go. And first of all, let me remind you, if you are not subscribed to this channel, it's a good opportunity right now to click on subscription, click on the bell to receive notifications and keep completely updated about what is going on the global markets. Now, go into details. I would like to share with you these 3 points. First of all, the Powell statements on the Congress in front of the Banking Council. We have seen a few comments done by Powell. It's actually really interesting because we have been waiting for the interest rate cuts in the United States for a long period. And finally, with this statement from Jerome Powell, it seems to be he's leaving the door open for cut interest rates finally this year, 2024, something that Wall Street has been waiting for a very long time, almost since the end of 2023. Very interesting topic. Plus, on the top of that, this week, 8 to 12 of July, we have seen also the inflation and the results. US inflation was actually dropping below the expectations, and it's actually good news, because if the inflation is rising below the expectations and it's in line with that expectations of less inflation in US economy, which actually leave them the chance of cut interest rate with no risk of new inflation waves hitting the economy. It means that Powell comments plus lower inflation than expected is super positive, and both of them go in the same direction. Actually, Goodwill, one of the members of Federal Reserve, say yesterday after the inflation dates, the inflation numbers, the inflation data, that it was an excellent numbers and is going in line with what the Federal Reserve was expecting for a very long time. So good news for the market. Second point we're going to also mention in detail is the movement by the yen. Dollar yen was rising above the maximum levels from the last 30 years and finally is dropping. The strategy between Bank of Japan and Federal Reserve, it seems to be a kind of battle. I believe Bank of Japan was waiting for Federal Reserve to solve the problem by taking the initiative and cutting the interest rates. That's why Bank of Japan, it was not taking any action in terms of reduce the liquidity, reduce the purchase of bonds in Japanese market. For the last few months, we have been listening a lot of speculations from Bank of Japan in this sense. And finally, after the inflation numbers from United States, the pair dollar yen has moved and normalize the quotes after a massive drop on yen against the dollar, which is dollar yen super high to top records in the last 30 years. And we're going to end explaining also why Nasdaq 100 was dropping more than 2% on Thursday evening. And we can understand this kind of adjustment on the market between certain sectors and who was the primary benefits of this drop in Nasdaq 100. First of all, Federal Reserve Chairman Powell told Congress that the central bank does not need inflation below 2% to cut interest rates, pointing to a significant cooling in the labor market. And we have seen already the last week, the previous one, the unemployment rate was rising in the United States from 4% to 4.1%. Therefore, good news, because finally the labor market is getting weaker, and therefore is the perfect excuse by the Federal Reserve to cut the interest rates, plus the inflation rates published this week. You got the numbers on the corner of the screen. We can see how the core inflation expected was 3.4%, and the resulting one was 3.3%. Also, month to month, it was 0.2% expectation. The result was 0.1%. And the normal standard inflation was an expectation of 0.1%. It was actually dropping minus 0.1%. Even some people were saying this is a kind of deflation risk and so on. The annual one was expected to end in 3.1%, and annualizing the inflation so far, the standard inflation is 3% at the moment in the United States. It's still good news, especially if Jerome Powell say, regardless the inflation, we're going to cut the interest rates. even if it's about 2%. Good news. You can also see the chart. Let's make some zoom here so you can appreciate the details on this chart. But you can see that the composition, if we analyze internally, what are the factors that are feeding this inflation, we still can see the sector, service sector is the main one, which is in blue, the main cause of this inflation. And therefore, I believe still the labor market is going to be a key piece on this puzzle to resolve the inflation problem, as Jerome Powell mentioned many times, and we can see that is true. Now, what was the movement of the market? We have seen initially, the first few minutes after the inflation release, it was rising. SP 500, mini SP 500 futures, it touched 5,700 points, which it was the target. We were just making a projection on the prices for the last few days, and we were just keeping in our charts 5,700 points on SP 500 has a natural target, natural goal of the price if it's moving upwards, which it was the case. It was moving upwards for the last few days during the week, and we were expecting, okay, any positive numbers or positive results for the market probably going to push finally the market there. But immediately after, price was dropping, and SP 500 was dropping from 5,700, almost like a drop of 30, 25, 30, 35 points, which is significant drop in the case of SP 500, almost 1%. We also have seen how gold was rising strongly to the new top maximum, which is around $2,450 per ounce. That's the area. In this case, didn't go to 2,450, but it was about 2,400, and therefore it means that the understanding of the market is if the interest rate gonna get cut, dollar gonna get weaker, and gold gonna rise to cover that depreciation of the money and the reserves in central banks, in funds. And don't forget the meme of the moment. Printing is coming, new liquidity is coming from Federal Reserve, making a joke with the gain of Trump cereal. Now, in terms of Japan, we have seen a strong movement from Japanese yen against the dollar. It was dropping the dollar-yen pair. And as I mentioned at the beginning of this video, I believe it was a kind of battle between Bank of Japan and Federal Reserve. Bank of Japan didn't want to take the steps. Federal Reserve finally is probably going to take the initiative. And that's why dollar-yen was dropping. By these hours, at the end of the week, was normalizing and rising little bit back to certain levels, but the drop was massive, almost like 4 figures on dollar-yen. So incredible. And the last topic, it was that drop in the drop we have seen in Nasdaq. Nasdaq reached a new record high yesterday, reaching almost 20,800 points. It was amazing. But right after that, it was dropping more than 2%, actually 2.2%. Explanation, I just update you with this article published freshly in the morning by Bloomberg, saying big tech stumbled most since 2022 has rate bets spur rotation. The explanation is the rotation on portfolios, on the big funds. Portfolio turnover. The inflation data was perfect and in line with the rate cut. Moreover, Powell said that there will be no problem to cut them with inflation about 2%. Everything fits. Absolutely everything fits. And therefore, sectors like real estate or utilities, like I mentioned at the beginning, took their share of the money owned by them, by the stock market. So they have been waiting for a long period in lateral movements. It was actually a divergence between Russell 2000, Dow Jones 30, and SP 500 and Nasdaq. Technological sector was rising while other sectors were keeping flat. Now, on Thursday evening, they recovered the piece of the cake they were waiting for. American Tower Corp is one of the examples I took from real estate, rising more than 5%. You got there the chart. Let's see first the drop on Nasdaq. It was amazing, super strong movement on Nasdaq 100. And then you got real estate, AMT, American Tower Corp, rising more than 5%. The perfect examples to see how the market was drawing the money from one sector to, boom, inject the money in utilities, in goods, and also in real estate. Well, I think this is the perfect example of what happens during this week. Really interesting moves on the price. It was actually exciting to witness these moments. And remember, if you are not subscribed, please subscribe to our channel if you want to follow up these market updates for the next coming weeks. Take care and good luck with the market. Bye-bye.